Thanks for sticking around, everybody. I'm Sap, I'm co-founder of tLabs. We've taken over the protocol and product development for tBTC. tBTC is a decentralized wrapped Bitcoin asset. And today I want to talk about the future of Bitcoin on-chain, basically. So I think Bitcoin, obviously a massive asset in the global markets today, growing every day. I think there'll be a traditional market that we see in the traditional financial world where we have structured products or ETFs or Michael Saylor kind of driving Bitcoin adoption in the traditional sense as kind of Bitcoin as a payments network in and of itself. And at the same time, we'll see an ecosystem grow on-chain. So the programmable crypto ecosystem, your Ethereum, your Solanas, L2s, et cetera. And we're already seeing massive use cases for Bitcoin in this ecosystem. And I think the future of it lies in a decentralized token like should have a title slide there, like tBTC. And if you haven't heard about tBTC before, let me give you a bit of background. We've been live since 2023 in the V2. We have about 4,500 Bitcoin TVL at the moment, live on 10 chains with 95,000 wallets using tBTC. And the way we position is as a trust-minimized Bitcoin asset on chain. So you might be familiar with WBTC, which has a different kind of custodial setup to tBTC. We take a different approach, and we think that this results in quite an interesting differentiation. And this is really kind of the crux of where I think the difference is here. So tBTC is more of a low-friction Bitcoin liquidity as opposed to WBTC or other wrapped assets, and it has these three differentiating kind of qualities, I suppose. So we have the security component of it, where the assets are actually custodied. The name threshold comes from the threshold encryption that's used, where we shard a Bitcoin wallet across the nodes in our network in order to manage the Bitcoin custody. And rather than having a centralized custodian where you have BitGo and Justin Sun managing the Bitcoin custody components of it, you have a decentralized network of nodes that shard the Bitcoin wallet across them and perform threshold encryption rituals in order to sign transactions on behalf of the user. So that's one of the differentiators. The second component is it's highly usable. I think similar to WBTC, we're live on the major lending protocols on Ethereum. We're on Aave, we're on Compound, Sparkland, have massive liquidity on Ethereum L1. And I guess that's a really important component for any Bitcoin asset is you want to be able to use it. You want to have the capacity to borrow against your Bitcoin, borrow stable coins, leverage long, leverage short, whatever you want to do with it. So that's something that tBTC has in common as well. And then the last component is this permissionless nature. I think this is the key differentiator. As opposed to if you wanted to take your Bitcoin, for example, and deploy it on chain, you have to go through a centralized custodian, a KYC process, there's a minting process, and it takes a reasonable amount of time to go through a centralized custodian like this. tBTC is completely permissionless, which means anybody can use it. You can just go with your Bitcoin wallet, with your Ethereum wallet, or a Solana wallet, and mint Bitcoin directly to that account. And that creates a much lower friction point of entry for Bitcoin liquidity. And at the same time, it's much easier to get your assets back to native Bitcoin. And this is one of the things that I think is important moving forward, is having this capacity to move in and out of Bitcoin natively to Bitcoin main chain. Because if we want to have a decentralized Bitcoin economy in a sense and have this permissionless DeFi rails, then people need to be able to go back between Bitcoin and use Bitcoin as though it was the base layer, the base settlement layer in the decentralized infrastructure. Because at the end of the day, Bitcoin is the best source of trust in the crypto ecosystem. We wouldn't be here if it wasn't for the trust that Bitcoin provides overarchingly. It's proving the narrative of crypto generally. So if you have a settlement layer that you can reduce your transactions and take your profits back to, I think that's a really critical part for DeFi adoption moving forward. So as a result of the kind of low friction, high liquid bridging capacity of tBTC, we have the ability to process a lot of transactions, and we see it more as like a liquid Bitcoin going in and out of Bitcoin, as opposed to this kind of static custodial version where people are more likely to just deposit their Bitcoin and hold it in place or deploy it in a liquidity pool or a lending market. This is actually a much more usable form of liquid Bitcoin in my opinion. People are generally more likely to mint and redeem, kind of go in and out of Bitcoin mainnet and DeFi, as opposed to just kind of setting and forgetting. And this is demonstrable through the fact that we've done maybe a similar amount of volume to WBTC in the last year or so, but they have a significantly amount higher TVL. So generally the way that we're seeing users interact with the protocol is a much higher turnover, which results in a much more a high volume bridge than WBTC. And we're seeing these numbers grow. And what we can kind of do with this, given that Threshold generally is run by a DAO, or it previously had been run by a DAO until tLabs stepped up. I'll explain a little bit more. But we have the decentralized infrastructure, we have the nodes in our network, we have the T token that is governing the network, is fully diluted and has been live in the market since 21, something like that. And this creates this kind of like Bitcoin tokenomic flywheel in a sense, that we have the Bitcoin economy as it grows on chain. There are new use cases, new capacity to deploy your Bitcoin, new yield, new leverage strategies, whatever it might be. And then as that grows, we'll see the bridge volume grow across Threshold. And what this does is generate fees for the Threshold DAO. And then the Threshold DAO reallocates these into ecosystem growth, which is what we're seeing as one of the core mandates of the DAO and one of the core mandates of tLabs, is basically to continue to grow the Bitcoin ecosystem on chain. And that looks like something practically like deploying Bitcoin liquidity incentives, using this Bitcoin revenue that we're generating through the bridge to reinvest in liquidity, to reinvest in new chain deployments or app integrations or whatever it might be, and basically scaling the capacity of the economy on chain to generate yield or generate meaningful value for people. And it's this kind of flywheel that we're trying to implement at Threshold and generate Bitcoin fees and reinvest that into the economy. And it's all governed by the Threshold network token. And since we kind of came on board, there's been a significant restructure at the DAO. So there was Threshold Network as this token holder DAO, as decentralized organization that was really good at like managing a decentralized protocol and keeping it stable and safe and doing the risk optimization and these kind of things, but really bad at optimizing from a product perspective, from a growth perspective, and doing deep protocol work. So we saw this kind of playing out over the last few years as 2023 V2 went live. And there was this kind of structural change that needed to happen in order to continue the growth narrative for tBTC. And that's where tLabs came across. So that's what I've co-founded here with my co-founder, McLean Wilkerson. And it basically looked like a public governance proposal that we said, hey, something needs to change. Let's put together a new format that we can continue to grow tBTC through. And it was really well received by the DAO because there was this strong need for it. So now we have a centralized labs company. We've got about 11 people on the team hiring since February, and super exciting to be continuing the growth for tBTC. And as a result of this process, there were some significant protocol changes that took place almost immediately. I think the main one of them was the DAO, or we proposed to turn off the inflationary mechanism for the T token, which equated to maybe 3 to 4% of T token inflation per year. So we've turned that off entirely at this stage, and T is now kind of a neutral asset in that sense, still used for governance of the protocol and distributing tBTC revenue. So that was a significant change. And then because of the tLabs restructuring, we were able to look at the DAO expenditure in terms of operations and staff and basically restructure that in this kind of on-chain public kind of restructuring process, which was really interesting to be a part of, very tedious, as anyone has been involved in that kind of thing could probably attest to. But what we ended up with is a new structure that's much more optimized, and looking at the revenue versus expenditure now, we're actually in a profitable position as a protocol, which is really cool. So this is some of the news that came out recently about that and the process that kind of involved us getting here. Okay, there's a nice animation here. Just imagine Bitcoin flowing between Bitcoin mainnet and tBTC. Not a great visual right now, but trust me, it was there. And I guess what I'm trying to do with this slide is indicate like where we're headed in the future. I think there's a great opportunity to continue to grow Bitcoin economy on chain. Something like tBTC does this very well, I think, because we have the capacity to do this low friction Bitcoin liquidity in and out. But at tLabs, we have a vision for the future. We want to build the V3 protocol. We've had the V2 live for some time, and it's been a great success in terms of our bootstrapping and usability, but it's still limited in terms of some of the functionality that we think the market is looking for. I think two of the main things here is an institutional support component where we can actually allow institutional on-ramps via tBTC as well, using this trust minimized version of wrapped Bitcoin. And then the other is this like high velocity, intense kind of layer where people can deploy capital, not needing to wait for Bitcoin settlement times, not needing to wait for the bridge to operate, these kind of things. And we can do this with kind of a layered architecture. So we're going to build all of this out across the existing trust stack and risk management stack of Threshold Network and Threshold DAO, and we're expecting to launch some exciting updates later this year about it all. Alongside that, we're doing a tokenomics rework and turning the T token into an integral part of bootstrapping Bitcoin liquidity. So, a short presentation. Thanks for sticking around, everybody. It's super late, last of the day, so I appreciate everybody listening. If this has been interesting to you, please check us out. We're on threshold.network. You can join the Discord. I'm on Discord @SAP. I'll be there if you want to ask any questions or hang around afterwards, and happy to field any questions as well. So thank you very much for your time. A great title slide would have been there as well, but appreciate you listening. Thanks.